Let's get right to it. Bring in the man himself, the man with the velvet slippers, Wilbur Ross, Commerce Secretary. Mrs. Secretary, first and foremost, it's great. Always great to see you. Well, I'll segue out of Nancy Pelosi because a lot of Republicans are angry at this debt ceiling deal, the budget deal. Why did this go through? Why? I mean, now we're breaking all the caps. She's taking a victory lap of sorts.
Well, I think it's good to depoliticize that, get it past the election. That's really what this does. There's enough adverse political environment in Washington right now. We really need to get on with the real business, passing USMCA, things like that will really help
everybody. Could you tell the conservatives in our audience, though, that maybe the administration will fight for lower spending in the second term?
Oh, I think so.
Yeah.
I think so.
All right, let's talk about the big news this morning, which is that GDP report. 2.1%. The consensus coming into the week was 1.8%. But let's be honest, Wall Street was looking for 1.3%. In that regard, this is a blockbuster number driven by the American consumer.
Well, absolutely. And it's despite the problems in transportation equipment. As you know, Boeing has been sidelined on the 737 MAXs. That probably took 0.4 of a point off. So it's really lowered, it's really better than the numbers even said, and that will come back in once those problems are solved and those planes are delivered.
The other red flag, business investment, a lot of people are saying it hasn't necessarily lived up to what we were expected or promised by corporate America when they got the big tax cut. Some are saying it's being influenced by tariffs. What do you make of the business investment part of it? Although IP has been stellar since the administration's come in.
Right. Well, IP should be counted very much as business investment because we're changing the mix of the economy away somewhat from bricks and mortar to IP, software, artificial intelligence. So it's not surprising that that kind of a shift would occur. What is interesting is business inventories went down. Inventories down. That's a good thing because they're going to have to be replenished later on.
Down $44 billion is a lot. We know that's an anomaly, and to your point, that means this third quarter should be really good in that regard. Let's talk about China trade for a moment. Where are we? The meeting is next week. We don't expect a deal out of that, but it feels like perhaps we're moving toward a deal again.
Well, the real question in next week is, will they go back to where we were before they change their mind? That's what's the important thing, because we were very close to a transaction before, and not just at the 40,000-foot level, fairly detailed level.
Were you surprised? Some longtime China watchers say that was what they typically do. In regular business deals, they take a shot at the last moment, see what happens. If it doesn't, then go back to the drawing board.
Well, it's not a unique negotiating tactic to get the other guy to where he's agreeable and then see if you can further improve the deal for yourself. So if that's all it is, it shouldn't be a big deal, and we'll get over it.
All right. Now, one of the things that seems to be helping is corporate America trying to get some of these corporations to cooperate. On that note, we had a tweet from President Trump out earlier where he says Apple will not be given tariff waivers or relief for Mac Pro parts that are made in China. Make them in USA, no tariffs. Your thoughts on that?
Well, the president is very committed to make America, buy America, and hire America. That's our dogma. We're going to stick to that. And it's appropriate. That's what he was elected to do. That's what he's doing. He's honoring his campaign promises.
There's a research report out from Zillow where they go with their agents and some of these analysts, and they think we'll have a recession next year. What do you make of that?
Well, the enemy keeps postponing when the recession's going to come. They're dying to have a recession. They can't bear going into next year's election with the economy the way that it is. But you get USMCA through, that's a 0.5 point or thereabouts on the economy. It's 180,000
jobs. But what if they don't get it through? I mean, could they hold off that long? But everyone wants it. Farmers want it. Manufacturers want it. Americans want it.
Well, if they do hold off and don't give it, it's a wonderful campaign issue because they would clearly be starving the U.S. economy, starving the U.S. workforce, simply to avoid giving the president a win. That's not a very good idea.
Secretary Wilbur Ross, thank you very much. Always great to see you.